So good afternoon. On behalf of India FinTech Forum, I welcome you all to the online session on rise of scams. Scams are changing and how can we prevent them? This session is supported by Feedzai. So here are a few points to note for our online attendees. You can enter your name and then post a question on the screen under the Ask a Question panel. The questions will be taken towards the end of the session. This webinar will be recorded and it will be published on India FinTech Forum's YouTube channel. It is my pleasure to introduce the speakers and moderator for today's session. So I warmly welcome Mr. Daniel Holmes, Fraud Prevention SME at Feedzai, Mr. Sunil Kumar KN, Chief Compliance Officer at Federal Bank, Ms. Shilpi Mishra, President and Head, Process, Controls and Risk Containment at Kotak Mahindra Bank. And our moderator for the session is Mr. Vikram Babbar, Partner at EY Forensics, Chairman, ACFCS, India Chapter. With that, I invite Mr. Daniel Holmes to start his presentation and take the conversation forward.
Thank you very much indeed. Hi, everyone, and thank you very much for taking the time to join our session today. I'm going to use the first 5 to 10 minutes of the session just to quickly introduce Feedzai. I want to talk about who we are and what problems we're solving in the market on a global scale. So just by way of quick introduction, my name is Daniel Holmes. I work as a fraud prevention SME at Feedzai. So fundamentally, we're thinking about how we can prepare the market for today and tomorrow with the technology that we provide to our banking customers around the world. Feedzai have been at large for just over 10 years now, and our mission is to make global commerce safe. We operate across a number of online players and more traditional players as well. And I specialize in the banking space. So you can see some of the banks here that we're working with globally. And fundamentally, we're about two things. One, making sure that good customers can transact without friction unless it's absolutely necessary. And secondly, making sure that bad actors and fraudsters are stopped at the earliest possible opportunity within the life cycle. And we do that through a single platform. And that platform is broken into two unique components. So the risk platform, which houses data science and rule development capability, and our risk studio, which allows alerts to be resolved if a transaction is prevented for fraud checks. Now, the risk platform is about understanding the user at a holistic level. So the Feedzai modus operandi is not thinking about transactions individually and trying to determine which are fraud from looking at them in isolation. It's about understanding the customer holistically. So a lot of the projects that we've delivered recently have been around technology consolidation. As banks have grown and their channel outlets have grown, customers interact with banks through many different means. That can be via a card, that could be a physical card or a card not present transaction. It could be mobile banking, it could be online or e-banking, it could be telephone banking, it could even be a traditional brick and mortar branch outlet. Feedzai aims to understand the customer in an agnostic way. So regardless of what channel they interact with you, with your banking service through, we understand that and we try and create what we call a 360-degree view of the customer through segment of one profiles. And we build models and rules based on prior experience that we have at scale from the industry. So we understand risks that have occurred in the past and we build detection mechanisms to prevent those risks occurring again. But importantly, we're adaptive and agile so that we can quickly adapt to future risks as and when they occur. And one of the themes as we move through the discussion today will be how the industry is moving from one unique challenge into very much the scam-led challenge, which we will get into in more detail. And a hypothesis on that is around the excellent work that the banks have done to close one door on the fraudsters and criminals. The fraudsters and criminals have gone away and regrouped and come back. And that's what's really driven the scam pandemic around the world. In terms of the risk studio, if we do prevent a transaction because we think there's a risk that it could be fraud, importantly, we give transparency within that decision. So machine learning has to be transparent in order for it to be effective at scale. A bank and a customer needs to understand why a transaction can potentially be prevented. And then through genome capability, which is essentially a link analytics platform, we can take an isolated incident of criminal behavior and we can extrapolate that out to not just uncover one instance of fraud, but actually potentially uncover whole networks of fraud. And our product suites offer the whole range of financial crime capabilities, from fraud right through to AML, including transaction monitoring, customer screening, and payment screening. And one of the more exciting things that have happened at Feedzai in the last 12 months is that, as well as being a platform that can consume the transactional data that I've alluded to so far, we acquired a company called Revelock at the back end of 2021. And whilst Feedzai has always been a platform that can consume this data and manipulate it at scale to drive good risk outcomes, the Revelock acquisition also enabled the capability of data generation. So as well as consuming that information that's coming in from the bank and understanding the customer from the bank side, we can generate data as it occurs in order to augment that decisioning capability. So here I'm talking about things like understanding the device that the customer's using, understanding the way in which they're interacting with the device. If it's a mobile, what's the angle that the device is held at? Where do I touch on the screen? What does my pressure on the screen look like? And it's bringing these two things together that we believe positions Feedzai in a really unique place within the market to be able to detect fraud at an extremely accurate level, whilst only intervening on legitimate customers if there's a need to do that. So that's all great at a technology and a platform level, but what problems are we solving for our customers? And we'll go on a little journey as we move through the panel discussion today, but fundamentally, if you rewind a couple of years, third-party attacks and unauthorized transactions were the crux of the issue within the global fraud industry. So that was fraudsters using mechanism of compromise such as phishing and smishing to obtain customer credentials unlawfully, and then attack the banks using those credentials in an attempt to defraud the customer. What we've also started to see more recently is the fraudsters change their approach a little bit and no longer just think about compromising the details, but actually going direct to the customer and forcing the customer to process that transaction on their behalf. So some of the common schemes you'll be familiar with in this space are things like romance scams, investment scams, invoice redirections, CEO frauds, and all these things. And then the final pillar on the right-hand side is there's more traditional, I guess, tech or call center scam, as you probably know it. So this might be me calling my victim as a fraudster, explaining that there's an issue with their device and I need to fix it. But in order to fix it, I need to use a tool like TeamViewer to take control of that end user's machine. And once I've got control of the end user's machine, I can then monetize through accessing online banking portfolios and et cetera, et cetera. And underpinning this, the traditional issue that we've seen in market is that attempts to control fraud is typically done with a rules-led approach. So what I mean by that is it's quite reactive in the sense that a challenge happens, a new rule's built, and that rule effectively thwarts the challenge for a short period of time. But over a longer period of time, those rules tend to stack up and stack up and stack up, and you can come into a scenario where you've got hundreds of rules creating contradicting outcomes, and it's actually quite difficult to understand the true impact of change in future. So what we're trying to do is remove the reliance on rules and trying to automate that capability through machine learning wherever possible. And this is the final couple of slides that I wanted to talk about, and this will weave us really nicely into the panel discussion that Vikram will host. But if we look back at the taxonomy of fraud over the last few years, we've gone from this scenario where 80% of fraud was unauthorized transactions, and we're now in a scenario where, on a generalization around the world, around 70% of the fraud that Feedzai are fighting from a digital and online perspective is scam-led, using some of those previous mechanisms and approaches from the fraudsters that I described. So we've been through this journey. This brings us to the current place. And as I hand now to Vikram and he initiates the panel discussion, we'll talk a little bit more about why we think we've ended up here, and importantly, where we see ourselves and the industry going in the future as well. So thank you very much for listening to that introduction, and Vikram, I'll hand over to you to kick things off.
Thanks, Dan. Thanks so much for this. And first of all, good evening to all. It's both a pleasure and privilege for me to be part of this forum today. And I would like to thank the India FinTech Forum for taking the initiative as such. I think today's discussion, or rather today's topic, is quite interesting, I must say. And I think one of the key reasons for that is the moment we talk about the word scam, I think the first thing that comes is, the concern that really comes up is, I hope I'm not the one who's falling into prey to such incidents, right? And that's the first thing that comes to our mind. In fact, we were internally debating about how do we really differentiate between what is a scam versus what is a fraud. And I think, to be candid, I didn't find much of a difference when it really came to incidents. When it, as far as India is concerned, uh, we've actually seen many incidents in the past. We've actually termed many of these incidents as scams in the past. But I definitely believe that the moment you talk about or you attribute an incident to a scam, it definitely has far-reaching impacts on a country, and that impact would be on the country's economy. It would always obviously impact the perception of the industry. It would impact the regulatory action, the whiplash, the capital markets of that country, and obviously the customer confidence. So I think if you really look at each of these parameters and if you look at each of these variables, these are nothing but variables where an organization would want to look at them from a growth perspective. And if you're talking about a scam, then all of these get impacted to some extent or the other. So that's how serious this topic is as such today. I was also reflecting on the last couple of decades and the kind of incidents we have faced as India, or the kind of scams that we faced. Talking about Satyam initially, about Sahara, the 2G scam. And I think a lot came out, and all the focus that really came out of these scams was manipulation of books accounts, manipulation of financial information, misrepresentation of data. That really came on the forefront when we spoke about these scams. And then subsequently, we heard about the Kingfisher, the Nirav Modi, the forex remittance scam that one of the banks faced in the North branch, the PMC. What really came on the forefront of these was, apart from misrepresentation, apart from manipulation, and also about siphoning of funds, diversion of funds, that really came to the forefront. And now, if you really look at more recent scams that we are hearing about, and again, just before COVID and now last 2 years where we've been in the COVID pandemic situation, we've seen obviously a lot more digitization. We've seen a lot more technology that has been used, and we've also seen a lot of more usage of payment platforms as such. And therefore, if we look at the way these automation activities have worked, this kind of scams have also moved towards ransomware, cyber, e-payment scams, and e-frauds as such. And those are the things that we are hearing now. If I talk about a small statistics here, in only 2 months of 2022, India has faced more cases of cyber than what it faced in the entire 2018 put together. So you can imagine the kind of scale we've already reached as a country, the kind of scale of scams and frauds we've reached as a country in India. And therefore, like I was saying, this has become a very serious discussion. This has become a very serious topic for organizations to start looking at how do we manage it more effectively as such. And currently, I think when you talk about these kind of scams where phishing scams have happened or data privacy leakage have happened, these have impacted customers as large. 20,000 customers get impacted at a time, thousands of customers getting impacted on time. So that's the kind of scale that is really happening. I think that gives me a good headway to really get into the conversation with our esteemed panelists today. And maybe Shilpi, I would like to, maybe start with you, with this kind of background. What is your perspective on how these scams have really, and we discussed and we spoke about what these changes are, but what is your perspective on what are the segments that have really got impacted when we talk about these scams in India over the last years?
Thanks, Vikram. I think I'll just take a lead from the conversation that we were just hearing you speak. I think at a broader level, scam is something which impacts the largest segment, and there are more victims. Now, if you look at it, for me, it's two sides of a coin. On one side, we have the corporate frauds that a single corporate fraud impacts multiple banks. And on the other hand, you have multiple customers who get impacted of a single banking institution because of social engineering frauds, or they could be many other digital frauds, which you spoke about. And additionally, I'd add to it if there is a man in the middle attack, right? So there it's the banking industry or the banking institution which really faces the impact on such events that happen. So when I look at it, I would say the biggest impact is on the banking industry because we have the financial, reputational, and regulatory risk that we stand exposed to when the scams happen or the frauds happen. See, when you look at it on the business side segment, and if you have to pick up any and say there is one segment which has faced the maximum scams, I think there is no such one segment, because if you merge history of global history and India, you have scams which range on the corporate side or the business segment sides, right? Starting from energy, which was Enron. You move on to airlines, which is Kingfisher, Jet Airways. You move on to technology providers, like you mentioned, Satyam. You move on to housing finance. We had DHFL, and an outcome of that was PNC Bank.
Yeah.
You talk about banking industry, you talk about Wells Fargo in the US. There was a scam there as well. So I think, there isn't one. You go into the steel manufacturing side, you have steel, you have Bhushan Steels. You go to gems and jewels, you have the Nirav Modi incident that we talked. You go to infrastructure, you have ILFS.
Yeah.
So there is no single business segment if you look at today on the corporate side. And when we shift our focus to the other side of the coin, which is the multiple customers in a single institution, one is, of course, data leakage. You have data leakage incidences reported, which is the starting point from the e-com industry, which is growing.
Yeah.
You have it on any online shopping that you look at or online opportunities that you have. You have data leakage happening even from renowned branded brands that you hear about. So I think it is a challenge coming in the ecosystem today as to really how are we going to deal with this and keep customer confidence high and protection of customers, right? That ownership suddenly shifts from the customer to the institutes providing services, whether it's banking, it's e-com, any one of us, right? We all have the responsibility of data protection of our customers. And I think one common thread when you look at it on the corporate side, in addition to what you mentioned of diversions of funds, etc., it's really poor corporate governance practices, which lead to the larger frauds.
No, thanks so much, Shilpi. I think there were some good takeaways, I thought, from this conversation, because like you rightly said, I think these definitely, when we look at scams or frauds of a large scale, you have to look at it from the both sides. We've seen this corporate impacts, which are multiple banks getting impacted, like you said, and then we would flip the coin to more on the side where a lot of customers get impacted. Definitely, these both are as big as we wanted to look at as such. So I think both are very, very relevant, like you said. And I think what I picked up was the entire ecosystem gets impacted. And whenever you talk about a scam, it's not just about an organization. It's not about a group of customers, entire ecosystem that really gets impacted out of it. And therefore, that impacts the customer confidence. And I think the point which you raised was, as organizations, it's our responsibility to really manage this situation or manage these challenges as we move forward. And these are definitely not impacting just one business segment or one industry. This is across industries as such. Thanks for that view and that perspective, Shilpi. I think what I would like to do, maybe just to move on and take a cue from this and talk to Sunil. Sunil, so we are discussing about how these scams are impacting. We just heard about where it really is really getting into impacting customer confidence and others. But I think the big stakeholder here are the regulators. And today, when regulators are looking at these incidents, they're really taking it very seriously as compared to what these situations were. What do you think are the impacts or the aftermaths of these scams? How do you see regulatory scrutiny increasing after this, and what are the expectations from the regulator when organizations are really looking at scam, they're getting hit by a scam as such?
Yeah, good evening, and thanks, Vikram, for that question and the brief introduction from the Daniel on the solutions from the fraud management and all. It's an interesting topic and discussion. As of course, we all know that when a scam happens or a fraud happens, definitely the entire ecosystem is affected. And one person actually stepping across is definitely the regulator, because regulator is truly worried, because regulator is the custodian. For example, if you ask anybody, any depositor in India, your money is deposited with bank, it is whose money it is. because that is
Yeah.
where I think the starting point of the understanding, because banks are the entity who can actually collect the deposit, and the depositors in the legal process, if you look at something goes wrong with the bank, actually they stand just along with the equity holders, just as an unsecured creditor. That is where the regulations comes into the picture, and the regulators and central banks' duty is to protect the institution. So when they look from that prism, anything happening in the industry, anything happening in the ecosystem is having an impact on the financial institution. That is a very, very serious matter. That is where they are coming into the picture. And what happens immediately after the scam, when the regulator comes into it, will multiple things. One is their scrutiny, as you rightly mentioned, and the questions will start. You may, after the Nirav Modi episode and all, banks were getting almost 150 to 200 questions week after week, and the whole system. And it actually, when these questions are coming up, it is true that banks have system, mechanism, process, and all those things, but definitely there are gaps also. And we know always the fraudsters are one step ahead, and they have seen the system starting from the Harshad Mehta episode onwards. They are seeing the gaps and loopholes where exactly, and that is what actually monetized to that extent. So then the regulatory action is 2-3 ways coming up: deeper scrutiny, deeper examination, deeper question. And that it is not one question from RBI or SEBI comes up. How much management time, how much time we need to spend to create a process around it, and to it is not only answering. Once we answer the question, and that process, you are also finding out as there are certain problems, you will create the process to that extent, you will try to build that or address the gaps to that extent. So if you look at the past, particularly if you see that certain measures of the regulator, and then comes into from their side the regulation tightening certain norms and procedures. I will just list out some of the important regulatory aspects happened. Particularly, we can start from the Nirav Modi incident. Afterwards, the thing is, the entire drive done by RBI, Reserve Bank of India, to that extent on the EDPMS and IDPMS, that export and import related data management and the reporting and the tracking of, because right from the country's independence onwards, never the exporters got all the money back to the country. But that has become a huge issue, and the tracking and monitoring and blacklisting, all those things process started with that. Another area is that SWIFT related thing. Anything happening through the SWIFT and the access related controls, system controls, that is what major area which has happened after this the regulatory sections. And after that, the psychologically also regulated have started to mistrust the manual process. So everything, each and everything, they would also like to see from the system perspective, how you are able to control. Are you generating the data from the system perspective, and your core system is actually in sync? And if it is the two things happened is system control, second thing, real-time reconciliation. These were the two thematic points. Thereafter, the regulators are taking up. Even today, anything in the process coming up, this will be the question coming back to us. And another thing, the recent two measures like NPA automation, all those things are related to how a system can be, or how the process can be cheated in the overall arrangement. Of course, Kingfisher and other incidents might have its own impact, but the way in which the regulator is coming and regulatory environment is changing. And internal office accounts, how it is being managed by the banks. And it is one of the area, actually, even banks are also recognizing that this internal office account, whatever controls you are putting, there could be certain gaps coming into, and that is where the regulator is asking for a complete scrutiny and auditors, the statutory auditors, certification, and all those things. So this is the direction going. So now coming to your final question, to the part that how the banks are coping up with. Definitely, it takes a lot of management. The way in which it happens is that deeper studies are happening. We are using the external assistance for that studies, and process changes, system controls are built, and a lot of time the discussions are happening at the board level, and the board level committees to that extent, whether these controls are enough to that extent, and intense discussions and communication is happening through the regulator. And from the regulatory side also, they are coming and checking up like this. But all these things having done, still we are possibly seeing the new incident and again. So the story continues. That is the reality. I will stop it with this brief comment about the regulatory intervention and the response from the banking and financial institution side to that.
No, Sunil, I think very, very relevant insights you shared. And I think I was just trying to look at, what are the key things you mentioned. So clearly, I think once you talk about a scam or a fraud, it definitely means heightened scrutiny. And, like you rightly mentioned, it creates an element of mistrust, unfortunately, on the institution, on the industry as such. And the kind of questioning, the line of questioning, very rightly said, the line of questioning changes suddenly. Right, you're suddenly the questioning is more about what is being done, what has been done, and also the kind of questioning also involves the management time, like you rightly said. So that means there's a lot of unproductive time which is spent by management in explaining what is happening around this, and which obviously impacts the overall, organizational objective in that way. So very rightly put. I think these are very, very important inputs you said, and I think couple of others, like you said, if there is an incident and you give examples for that, how does it really impact with new regulations coming in? You get into more of understanding how you need to change your own processes and controls. I think today, like you said, the themes are definitely around system-driven activities. Because today, even if you ask me as a fraud practitioner, when we look at some incidents and when we look at investigations, a lot of the gaps which we have seen are also definitely related to manual activities or manual control that comes into play. And therefore, even the regulators started pushing into understanding where you can really get automation in, where you can really get things to be more real time, like you really said. And obviously, those are those own challenges, and I'll come to those in the subsequent questions as such. But yeah, I think definitely good insight, Sunil. Thanks for that. Thanks for sharing that. It also brings me to the next point, which I thought, Dan, I could check with you. We're talking about root causes here. We're talking about the impacts here, and we're talking about how automation and technology has to come in, and how the expectation of the regulator suddenly changes, where you really have to get into more system-based activities and lesser into manual stuff. So in your experience, Dan, you're working back on such a technology where you're supporting organizations and managing the risk of fraud and scams. What's your view on the way the technology levers are being put in by banks today to manage this kind of thing? And in fact, I would like you to stress more on the next generation controls, because we know that technologies already has been in place. There are a lot of banks who've invested in tools and technologies, but what are the next generation controls that are coming in, and what are the features or what are the new things that the bank should be looking forward to, from platforms where they're investing?
Yeah, thanks, Vikram. So I think, look, just to quickly touch on the regulatory stuff. I think a key part of any regulation isn't just about things like liability and who's accountable for the loss. It's about the regulator putting in the right guidance to recommend that the banks have the right controls in place to protect their customer wherever they can. And I think it's those controls that I'd like to talk a little bit more about. So if you look at the fraud ecosystem and the technology ecosystem at most of the large banks today, there's a consistency in terms of what's there across all of them. But there are also some islands of tools and some unique tools which some are starting to adopt, and I think some that will start to mature over the next 2 or 3 years. So I think if you look at the core of a fraud ecosystem, things like transaction monitoring, understanding how much your user pays, where they normally send their money, the time of day, the day of week, etc., that they normally make their payments is the engine. That's going to be the key to success across the board, and that's what most banks are already doing. I think these are things that need to be covert, so they need to be bubbling under the surface without interrupting the user journey unless absolutely necessary. And of course, they need to be real time as well to give the bank the best chance of effectively stopping the fraud. And as we see the world globally migrate to instant payments and faster payments, that only really pushes forward the requirement to be real time with your fraud detection endeavors as well. Otherwise, you're going to be in a really challenging place. So I think that's the core part. Automating that to the maximum extent possible, as you rightly said, is key as well, so that you can manage it with resource that's efficient rather than needing many hands and many different kinds of capabilities to be able to go in and write code and build rules and understand the impacts and unintended consequences of any change that's made is also key. And I think over the last 3 or 4 years, what we're starting to see banks do as well is adopt augmentation layers on top of that. So a good scam detection strategy is all about layers. It's such a difficult fraud typology to stop that one single piece of capability on its own isn't going to do the trick. So transaction monitor on its own will get you a reasonable level of detection, but it certainly won't solve or move the problem. And what we've seen banks do over the last few years is start to add in things like device identification and recognition. So can I understand which device Vikram usually interacts with, so that when he comes in tomorrow, I can see if that device that he's using is the normal one for what he usually uses. We've started to see things like malware detection. I know that Shilpi mentioned malware and man-in-the-middle attacks earlier. Having a good set of malware controls is absolutely key. And I think when we talk about future technology, one of the future risks that I think we're thinking about here is how, as consumers migrate to a mobile-first world, the malware threat will follow from man-in-the-middle to mobile Trojans and mobile-led automation attacks. So I think malware detection is the second one. The most recent piece of technology that we've started to see adapted is the concept of behavioral biometrics. So this is a spin on traditional physical biometrics that a lot of consumers are familiar with through use of modern smartphones, but thinking about things like Face ID and Touch ID, they're what I'd call static biometrics, in that they're kind of binary and they don't change. But things like behavioral biometrics are a little bit different. So understanding how the user interacts with their laptop, how quickly they move their mouse, how they type, do they use keyboard shortcuts, etc. And as I said before, humans are creatures of habit. We do these things naturally without thinking about how we do it. You could almost liken it to something like gait analysis and understanding how a human walks. That's typically parallel to how they would interact with a mobile device or a desktop or even a laptop. So I think that's the more recent line of technology that we've started to see adopted across global banks. Now, these things are already good for recognizing when the user isn't legitimate. So I can understand how Vikram usually behaves. I can understand the device he usually uses. I can understand the location. I can understand his payment history. So if somebody comes in tomorrow because they phished my details through a scam, they'll have a different device, they'll be in a different location, their behaviors will be fundamentally different. It gives you a really strong opportunity to stop that fraud, not even just as the transaction occurs, but actually even earlier in the life cycle, perhaps as they're trying to enter the e-banking platform, for example. There's a good case for preventing the fraud before it even happens. And I think then as the challenge evolves and we start to think about some of the different types of scams that we've talked about, things like if I'm coerced into making a payment myself, well, suddenly my device, my location, and my behavior is all me. So some of those tactics that are good for stopping unauthorized fraud aren't as good for stopping the authorized fraud. So I think some of the cool stuff that we're starting to see in research is things like the biometrics telling me that this is Vikram, but actually the way in which he's behaving is perhaps signaling that he's under duress or he's acting under instruction from somebody, because the time between the login and payment is 3 times longer than what it usually is. And that's because there's somebody on the phone talking Vikram through what to do in that payment and in that scenario. So I think that's one of the key things. And I think just to build on, again, what you and Sunil said before, I think it's paramount to get this right from a consumer perspective. You know, banks want consumers to adopt e-banking and mobile banking first. Many services are now available through those types of platforms, but the customer's got to have the confidence to go on there and know that they're protected. You know, some studies that we've done in the past will show that a customer that is the victim of fraud, I mean, let's face it, there's no worse customer experience than logging into your mobile banking and seeing that your money's gone. I don't think you can beat that as a bad experience. I think that's as bad as it gets. And studies have shown that if that happens, a consumer is more likely to leave that bank in the following 12 months because they no longer feel secure interacting with that platform. Whereas actually, if you take an opposite scenario, customers are usually savvy enough nowadays to realize that fraud is essentially a commodity and it's a business within a business. And there are risks out there, and the reality is that fraud can happen to anyone. It can happen to any one of the 4 of us on this call, and regardless of demographic or age as well, right? You know, this is the reality, such as the sophistication of the fraud attacks that we're seeing. But if I can protect my customer and proactively contact them and say, we've just stopped a transaction on your card that we didn't recognize because we think there's risk of fraud, that moves what would have been an awfully negative customer outcome into an extremely positive one, because the customer realizes that the bank have got their back and they've got the right controls, technology and practices in place to keep an eye on them in future months. So they're just a few things that we're seeing, Vikram, and a few things that we're thinking about at my own company as well.
Yeah. No, Dan, I think very interesting observations and interesting insights. You mentioned about the current or the new areas that banks today are looking at, and from a technology standpoint, is about how do you really combine the device, the location, and the behavioral biometric, like you rightly mentioned, right? So traditionally the rule-based systems are all I got isolated completely. I don't think that's something working for banks anymore. We are looking at scale. Talk about countries like India, massive scale, customer segmentations, geographical transactions happening. So I think obviously you need something like this to really identify the right and really prevent. I think the focus is more preventive than really the detection or the investigative or the reactive mode. So behavioral biometric, I think that is something which is very interesting, and I'm sure banks are looking at those activities where you try to understand if the person who really transact, is that his normal behavior, to really look at in the device, the location, and how the transaction is really happening, what merchants is happening, the payments is happening at what time. Those are some of the things that are getting into play when it comes to this. So thanks, Dan, for sharing your inputs. In fact, before I thought I'll move to the next segment, I thought maybe we can look at some of the questions that are coming up. I'm seeing a lot of questions coming up on the forum around this topic. So maybe I can just put up the first one, and it'll be open to the panel who wants to take that up. But the general comment or the question that is coming in, that most of the frauds that have happened in India in the banking space are definitely to do with connivance. It's definitely to do with how connivance is happening within the organization. And even though we have controls, we have systems, those are still getting perpetrated through the systems themselves. Isn't that how the root cause for that? And Sunil, maybe you or Shilpi, what do you feel? Is that correct as a comment? Is that correct as a observation from the audience?
Yeah, sorry, I can see.
Sure.
It is true that some of the fraud incidents, or when we look at that, there is definitely that, particularly when you look at in the context of the corporate frauds happening in the banking, say take the Sahara's thing, Kingfisher thing, Nirav Modi, definitely there were some black sheeps within the organization. It is true. So definitely, I cannot say that it is completely untrue to that extent. And certain things, when we look at that, it is not always a connivance to that extent. There could be certain type of ignorance, certain types of inefficiency also is leading to that ground. So there are process and systems to that extent, but there are definitely, that is what even when I spoke about the general perspective, I said there are gaps in it. See, we can say that we can build the fence to that extent, but even after the fence also, there could be gaps coming up to that extent is one thing. And second thing, many of the corporate frauds, when we take this approach, we will see that there is sometimes many are error of judgment. And on the hindsight, definitely we can say, I will tell you very clear example that one of the first of the diamond segment fraud happened somewhere around, I think in 2011-12, similar to Nirav Modi in India. I have got an opportunity because I was working in a bank at the time. We were the lead working capital banker and other banks were there. So the entire thing is examined. So where it has happened is like this. So there were 10 to 15 banks were having in the consortium lending, and the exporters did through everything done through, it is a diamond export. So it is happening through aircraft. So the Kochi as well as Madras, Chennai airports were the key point, and nobody knows what is sent inside. That no banker will know. We are just seeing the document to that extent, and just to increase, take the bank borrowings and double the export proceeds to show that figures, just it was exported. It's all connivance with the customs authorities to that extent. And what the banks, because we were actually looking at that time to the renewal of this working capital facility, and we were consistently asking, who are your the the counterparties when you are doing that, they give that list. And there is a control mechanism saying more than 5% any counterparty you are sending, that we need to do a credit due diligence. What he has done is just 1 month time, he took time. Within that 1 month time, and every bank is actually looking at more than 10% any particular party going, they are actually tracking it. Everything he distributed across. Within 1 month time, all this, the export, what they have done is done to 10 or 11 fictitious companies constituted overseas in the DIFCC region in one office, this thing like that. So these things actually, we can see outside after 2 years down the line, if you look at, yes, we can say ignorance, negligence, connivance of the bank. But the banker at that time actually examining this proposal, he was actually the association president of the Gems and Jewelry Association, such a reputed person at that time, and just sort of 1 month's time to get this list to be provided, because he says we are also renegotiating with the counterparties. So yes, definitely there can be a view to this extent from the corporate. We see that. Okay.
No, thank you, Sunil, for taking that question. And maybe I'll just take one more question before I move to the next segment. There's a question around where more transactional related frauds are small in amounts. Maybe Shilpi, you can take this up. They're quite small in amount and sometimes very difficult to distinguish between, is it a fraud, is it money laundering, what is it? How do you really look at those transactional fraud, which is generally small in value, but then it could become a larger issue for the bank as such? How would you look at that?
So I think, we need to divide it into two parts. One is when you're monitoring transactions from a perspective of the customer being a victim, which is the debit transactions in the account. And the various methods that Daniel just spoke about, ranging right from the time the customer logs into the digital channels to the time the execution of a transaction happens. What are the various fraud prevention technologies that can be used? And more importantly, deploy the technology which will give a frictionless experience to the customer, right? Because every transaction gets executed in milliseconds. So today, do we have technology which can prevent such frauds? The answer is yes. However, we are all progressing in this technology. It's a progressive development, deployment, experience on these technologies. Okay, so that is to address when we talk about a customer being a victim. When the customer is the perpetrator of the fraud, how do you measure that? That's when you look at the credit side of the customer's accounts. And for that, you have a very different lens of understanding the pattern of credits that come into an account from a money laundering perspective. Who is remitting the money? How is the money moving after credit into various different layers, right? So there is a very different technology for that. There is nothing on behavioral biometrics which is going to address that as we speak today. So that's where you would look at probably machine learning approach to see how do you manage those patterns of credit, doing away from the traditional methods of monitoring of money laundering transactions. Now, that's how technologies may differ to a stage, right? And that's how we have to segregate the technology part in prevention. And detection is now per se. It is now about prevention or early warning signals when you talk about money laundering.
Right. So, well, thanks for that, Shilpi. I think one thing is very clear here. We're talking about the kind of incidents we are seeing on both sides, on the retail and the corporate. But one thing is very clear: technology has become very imperative, right? Without that, I don't think it's work out. It's frauds, money laundering. It's about identifying patterns. But I want to ask you, Shilpi, how important you think is the implementation of the technology? Because again, as a practitioner for fraud and money laundering, when I speak to organizations, I speak to banks, and I try to understand, how they've really gone about investment in the technology, identifying the right technology. So we all know it's important, it's imperative, you can't work without it.
Yeah.
Can you tell me, or can you focus on how important it is on implementing the technology? Because that's something which is core to usage of that. So how much time do you think you need to spend on implementing it in the correct manner? Because you can have the right system, But if you've not implemented correctly, then it will again not give you the right value of that investment. So how do you really want to give your perspective on right implementation of a technology?
I think right implementation of the technology is basically identifying what is the benefit that technology is going to give you. It is about how you first identify the objectives, and then when you get into the implementation, it is how agile are you in the implementation. And I say agile, why? Because fraud patterns are changing by every second. So point is, whatever technology you pick up, technology provider has to be agile to the changing patterns. Behavioral biometrics, what Daniel spoke about, the industry has been speaking about this for the last 18 months.
Yeah.
Prior to that, it was very traditional rule, velocity, then you came into behavior patterns. Now you're talking about, behavioral biometrics, you're talking about adaptive authentications, you're talking about different segments now. Today, in the last 18 months, we are speaking about it more. So the implementation is about agile approach towards the entire technology and interfaces with your existing technologies, right? Large institutions have already got a framework. Now, when you're implementing any new technology, how does it integrate with the other sitting technologies and ensure that we have a frictionless experience for the customer? Because every hop that we take in the technology for prevention of a fraud takes some component of a millisecond.
Absolutely.
Right. So I think, that's how I look at saying implementation. I think every institution goes towards a clear target or project-oriented implementation. But while you are implementing, how agile is your technology to switch and adjust to changing trends? Because you will take 6 months to 9 months. Let me tell you, friend, fraud pattern has changed.
Absolutely. Yeah.
So
very,
that's
very true. Very true, Shilpi. I think clearly, if I pick up the key things you mentioned, and the agile approach is very, very critical when you talk about implementation of technology. And I think in India, one thing is we've seen across banks is the kind of different or the multiplicity of systems or the core system that are used. So you rightly said that interfacing with all the systems is very, very critical. It shouldn't happen that there are certain systems that are working manually and the others are then integrated to the fraud technology system as such. So I think interfacing across the different core systems is very, very critical when you want to really look at the right implementation. And like you said, frictionless experience for the customer. I think that is again very, very critical, because you don't want a situation where it is actually adding more onerous activities on the customer as such. So thanks for sharing that input. Sunil, I want to just come before I go to Dan. There are some questions as well on the technology side, but Sunil, I just want to come to you before I go to Dan. We're talking about technology a lot. We are saying that things are changing. There are variables, there are parameters which we need to look at. But is it just about technology? Some of the frauds or scams which have happened in the country, is it just about technology, or is it also about looking at the right education program for our consumers? Are they really aware of what kind of scams can hit them, or what are the risks in really getting into certain transaction modes, or really, they're talking to a phone banking officer? Is that the right person on the other side? So how important is the awareness, or how important is the education program when it comes to, reducing the risk of fraud and scams? I thought maybe we can focus on that area as well.
Yeah, you're absolutely right. See, this is very, very relevant in the context of the retail segment when we are seeing that this type of digital frauds and all those things are happening. And I would say that 3 reasons why the education is very, very critical. System-wise, a lot of things banks can do, but the problem is that I would say that my recent experience is one of the senior officials in the one of the bodies. Actually, his wife was duped. So he just came and then she went for purchase a TV and money was transferred. It's ultimately after 3-4 banks ended in your banks. Can you just all these things. When from the our side also money is moved. When I asked what exactly happened, then it was OTP was revealed. So I said, you are actually issuing the security guidelines to us every month or every week. One of the security guidelines you issued, if you read out to your wife, this would not have been happened. So this is what the problem in India. 3 ways I am saying is, one is people are very loose in giving their information. Anybody ask mobile number, email address, you will give your and your relatives, your parents, everything you will give, because you are just very, very loose in that. Data privacy related concept is very, very weak or in a very, very nascent stage in India that needs to develop. Number one. Number two is what is happening is this OTP sharing is a big problem, because if you get a delivery of Amazon or a Swiggy, you have to share the OTP.
True.
So the same with, they are actually sharing the OTP of the banking transaction also. The difference is one is 4 digit, other is 6 digit, is not in the mind of the people. So that is the main reason almost 80% of your bank account money gone on a digital channel. 80% cases compromise on the OTPs have been happened to that extent. So that is also very critical to say that education is important. And third thing, how many controls I will build in the digital? In the present era, people want to open a digital account within 2 minutes, loan within 10 minutes. When I, as a control function, ask for an additional question, it takes additional 20 seconds, 30 seconds in the system, so that the customers are what they want. They want speed. They want ease of transaction. Ease of transaction means everything should be simplified. And thirdly, the accuracy. So this ease of transaction and speed in the digital world, what the customers are expecting is resulting in certain controls are being either diluted to a certain extent. So this is very important to have this education of 2-3 things of this. Your information sharing needs to be controlled and curtailed. And when banks, certain system and digital transaction, you are having one more step to take, it is to actually protect you. Because if X bank is having 3 steps and I put a 4th step, the customers will actually come back and say that, and my business will have a big problem. So they need to understand each control is building not to create a nuisance for them, but to protect them. So I would conclude that in all these 3 situations, if you look at, education is most important.
No, thank you so much, Sunil. I think definitely because the way we have seen these incidents happening, it's a lot to do with the way we are sharing information, like you rightly said. And the classic example you gave, because today I don't think and mostly in the tier 1 cities we're all using, and now tier 2, tier 3 as such, we're using Swiggies and all of it, and it's so used to giving those OTPs out that sometimes you're not able to differentiate, like you said, between how banking OTP works. So that's the 2-factor authentication the bank has really got into, right? That's the kind of technology you want to implement, because you don't want somebody to just bypass it, and therefore you need that 2FA to really work. But if I'm sharing that information, that's really gone. However, you have implemented the technology, however investments you've made in that, it won't work. So that's why I thought it's important. Also want frictionless experience. At the same time, it should also be known to the customers that if at all there are additional factors or additional information that is sought by the banks, yes, it will not lead to that kind of speed of the transaction which everybody wants today. But it's also about protection. If you're really asking that questions to the customer before a transaction happens, that is for better protection of that customer itself. So yes, I think while technology is critical and the way things are moving right now, we also need that kind of awareness to really come in on such things. So thanks, Sunil, for that. Dan, I'll just move to you. I'm also seeing a few questions, but I have one question for you in any case. That, Sunil also mentioned, I'm just taking a cue from there, that these things won't stop, right? Fraudsters are not going to stop. They're always a step ahead. We all say that, right? What does the future look like when it comes to monitoring of frauds? In fact, and I'll also club it with a couple of questions that are coming in from the audience here as well. You spoke about behavioral biometric. You spoke about different parameters that can be used by organizations and banks today to identify and prevent fraud. How much of that do you see in India happening? Because I think in India, we are also, while we are seeing scale of transactions, we also have, like I said, there are certain challenges about multiplicity of systems. There's a lot of information that is still, lying in different places. How do you, So data infrastructure has become a very big activity today. You really want to put in the right technology, but you really need to have the right set of data, the right data quality to get the right output. So two questions, maybe Dan, for you. One is, what is the future looking like when it comes to fraud monitoring and fraud prevention in India specifically? And do you see technologies like behavioral biometric really, banks really looking for that today? And how do you think that is going to shape up in the coming years as such?
Yep. Thanks, Vikram. Some really good questions coming in, and I agree with what Shilpi said around fraud. If you put in a piece of technology today, in 6 months, it's already likely to be less effective because you're pushing the fraudsters to do something different. And unfortunately, fraud does turn into a reactive game in that sense, in that you can try and get yourself on the front foot, but the reality is you can never foresee what's coming down the line. And also internally, I've worked at banks before joining Feedzai, and it's very hard to build a business case for spend on the basis that something might happen in the future. You almost sometimes have to let the fraud occur and quantify the problem to justify the investment and the spend. So I think just in terms of the risks and the controls, particularly in the behavioral space, I actually think one of the biggest risks is building on something that Sunil said, which is actually around user expectations. I think customers want to move so quickly. They're used to kind of one-click checkout on e-commerce, and they expect that parallel experience from their bank. So I think there's a risk there that banks put too much emphasis on giving that one-click experience to their consumers and neglect some of the technology requirements that are needed in order to safeguard them and protect them. And actually, in some parts of the world, we're starting to see customer expectations changing a little bit away from pure frictionless. If I'm a consumer and I'm paying for my lunch at a supermarket and it's £10, I don't want to be stopped and asked to authenticate for that. I just want to spend and get out. But actually, if I'm about to spend £25,000 on a deposit for a house or a car purchase or something like that, I actually don't mind my bank confirming that that's me, because it lets me know as a consumer that they've got my back. So I think user expectations and banks getting that right is a risk at a consumer level. In terms of the specifics that were asked around behavioral biometrics, so absolutely it does work and it is effective on mobile just as it is on desktop. There's a plethora of different data points that can be grabbed from mobile devices, including some of the ones I mentioned earlier, such as the swipe pattern, the touch pattern, the size of the press and the pressure of the press. There's also what we call gyroscopic signals that can be collected from the device as well. So taking a device from that position and it going to my ear, for example, might be a signal that I'm on the call. Things on the iPhone, for instance, the light sensor at the top, if that darkens, it probably suggests that the phone's moving like that, and perhaps indicative of me being on a call. So you can absolutely start to normalize some of those behavioral patterns from a mobile perspective, and start to use that to normalize what the user does and in future spot the anomaly. I think fundamentally, one consumer, we have to think about them differently at a biometric level when it comes to how they interact with a mobile device versus how they interact with a desktop, just because the data collection is very different. You're talking mouse and keyboard on the website, and you're talking touch and gyroscopic on the mobile side, as I just described. So we're definitely starting to see some of these technologies being adopted on a more global scale. The UK started to plug these things in around 3 or 4 years ago. APAC, the last couple of years, have started to adapt it and adopt it as well. And we're starting to see the US market and the North American market now start to set up and take account of some of these controls. But ultimately, I think it comes back to what I said at the start around the risk. You can't necessarily justify going in and plugging in these controls unless you've got the problem that justifies the spend. So it's almost a vicious circle in that sense. But we are starting to see some of these capabilities make their way into the Indian market. And to Shilpi's point, she said the last 18 months or so, I suspect for the next 18 months, we'll start to see the interest grow and grow even further. And then the final point to address the final question was around how do you then implement these technologies in a smart way? You've got your existing ecosystem. You don't just want to tag behavioral biometrics separately as an outcast, as a separate decision, because you end up with conflicting outcomes and you're not making the best possible decision for your consumer. What if behavioral biometrics says this transaction's fine, but your incumbent engine says, actually, this one is declined? Which one do you trust? So it's really important to make sure that you're pulling all that information together into a single enterprise engine. which kind of, full circles right back to what I stated in my presentation at the start, through that single platform, and then automating as much of that analysis as you can through machine learning to drive the insights that the human eye perhaps couldn't see. So I think they'd be the key takeaways from my perspective, Vikram.
Yep. No, thanks so much, Dan. I think, again, those were very insightful discussions around the new areas and the technologies that need to get into. I think in India, like Shilpi said, and like you're saying, I think there's a lot of interest. There is a lot of discussions around in the last 18 months on how really we need to bring in the better ways of monitoring that can be more preventive, as such. There are new methods of payment now. You have UPIs now, which is, drastically changing the whole landscape and the kind of transactions that are coming in. And therefore, you need these kind of technologies to really come in to really understand and prevent the fraud incidents that are coming in as such. I'm also mindful of the time. We are just about an hour into the discussion, which is what our timelines were. We are still continuing to get a lot of questions. So thanks so much to the audience for asking them. We are taking note of that. And I'm sure from a India FinTech Forum perspective, we will respond to each of these separately. Unfortunately, we are running out of time right now and can't take each and every, but thanks so much for posing all the questions. I think that also shows the kind of interest the audience has in this kind of a topic as such. With that, I just want to hand it over to the India FinTech Forum. Thanks so much for this.
Thank you. Thank you so much. Yes, we have been getting a lot of questions here. You can see the enthusiasm, but in interest of time, we need to pause here. So with that, we come to the end of this webinar. I would like to thank all our speakers, Mr. Vikram Babbar, Mr. Sunil Kumar KN, Mr. Daniel Holmes, and Ms. Shilpi Mishra for their time and sharing their insights, and our lovely online attendees for making this entire discussion so interesting and so engaging. Last but not the least, I would like to thank Feedzai for supporting this webinar. Going forward, if in case you want to organize a webinar with us or just want to say hi, do drop us an email at info@indiafintech.com. And with that, have a great weekend. And thank you so much for being here.
Thank you.
Thank
Thank
you.
you.
so much.
Have a good
Thanks.
weekend.
Bye-bye.
Thank you.
Bye.
Thank you.